maybe we could shift gears a little bit. So you mentioned before that the big drivers of the market this year have been the tech industry, the Magnificent Seven. I'm sure we're all aware of the fact that a lot of investment has come from these companies into AI. And AI, people think only of the technology itself, but there's a lot that goes on behind the scenes. The infrastructure is really what I'm making reference to. So a lot of investment has gone on into, and I think you mentioned it before too, Jack, is data centers, the employment of individuals, of technicians and professionals, even electricians, and et cetera, et cetera. So to build this out. But these companies were rich with cash. They had a huge cash positions on their balance sheets. That's not as great as it had been a couple of years ago. So going forward, I guess the question I have for you is, moving forward, are these companies, they've used up a lot of their existing cash. So moving forward, what will they be doing? Because I have read and I have seen where they're starting to issue bonds and they're looking for ways to continue this financing. And I guess the second part of my question is, do you see parallels to what's going on today, what happened 25 years ago or so, the dot-com bubble?
I do think this era is quite a bit different than the dot-com. There are some companies, if we're going to get into names, Oracle has probably been the biggest question mark. Their ambitions have been such that their need for financing have been, well spelled out and are pretty dramatic. And the question is, are the cash flows going to follow?